Hi, my name is Frank Washkuch. I'm the news editor at PRWeek, and I'm here with Andrew Healy. He is the co-founder and partner at Water and Wall Group. Andrew, welcome.
Thank you.
So you guys just launched this firm a few months ago.
Yes.
Why did you decide to go out on your own, launch a new agency, in what most people would say is still a pretty uncertain economic time?
Well, my business partner and I have been working together for quite some time, and it's been a dream of ours to run our own agency. But really the biggest driver is that our specialty areas in financial services.
Right.
And over the last few years, particularly after 2008, we saw a shift in the way that financial brands, investment brands, approach public relations and marketing. After 2008, they paid a lot more attention to it. They were much more cautious with the folks that we're working with, and what we felt was they really wanted to align themselves with vendors and folks who were experts in their area. So having worked at generalist firms and agencies in the past, we found ourselves going up against new business, against other boutique specialty shops who were winning. And in speaking with some of our clients and some prospects and folks we know down on Wall Street, we started to see this shift take shape, and that was one of the biggest drivers, was to sort of hone in on that specialty boutique area, position ourselves as experts. We're not going to be everything to everyone. We're going to be one thing to one group of people. And it's sort of by minimizing the universe of folks that we're dealing with, we're really standing out and being more effective.
Mm-hmm. So what's the big difference between pitching for business as part of a larger agency and then pitching for business with a small boutique firm? What are the big differences?
Well, certainly one of the biggest drawbacks of being a startup agency is we no longer have, we can never leverage a former agency. The former shop we worked at was a lot bigger and had a longer track record, so that always helps. So, being a startup brand and a small brand, Water and Wall is not that well known. So what we had to do was really rely on our contacts and our experience and reputation in the industry. And myself, having been in financial PR for about 10 years, and my partner for almost 30, we had a pretty good reputation there that we could rely on, and folks that we were networking with. So brand awareness was a big item we had to overcome, and it's just one of the reasons we've had to work harder than ever at network and reach out to folks and tell our story.
Mm-hmm. And what's changed the most in financial PR since 2008? You mentioned brands want to get out there more, tell their story, get their side of the story across. What else are they doing that's different from a few years ago?
Well, I think you're seeing a shift in the way that Wall Street brands and financial brands are being more open and more transparent. Pre-2008, particularly with some of the alternative managers out there, hedge funds, private equity, there's a lot of mystery, allure in terms of what they did, and they really shunned the media to a certain extent. Now that they've been dragged through the mud a little bit, there's a lot of funds out there that are much more open to engaging with the media, engaging with clients and investors, because frankly they need to. Another aspect, clearly, with the advent of social media and the way that sort of transformed the way everyone generates content and consumes content, it's helped drive new opportunities for us that as few as 4 years ago didn't exist.
Has the election had a big impact as far as private equity getting beat up a little bit? Do those firms want to get out there and tell their story more?
We're seeing it a little bit. For the most part, the media, the financial media, understands that the issues taking place with the election and Bain Capital is mostly just a political situation, so they've distanced themselves. And the majority of private equity firms out there aren't on the level of a Bain Capital, these giant mega brands. Most of them are small and middle market funds that operate in their local community. So it's a completely different comparison. But it's any time industries that we represent or any industry as a whole has taken a reputation hit, it does impact the way we need to communicate. And we've done so with some of our private equity clients, some on the hedge fund side.
Mm-hmm. So what is the big thing that you wish you knew before you launched your own firm? I mean, is it getting the phones up and running tough? I mean, is it something as simple as that? Or
it's one of those things that until you do it, there's really only so much you can know. We knew it was going to be a lot of work, and we knew there was going to be a lot of unknowns. I'd say the biggest thing is the amount of time spent on the operational business side. Before Water and Wall, we both managed a large financial practice at a former agency, but we didn't have to worry about paying the bills or worry about getting our emails and our phones and everything.
Sure.
And I'm surprised, although in hindsight I shouldn't be, how much time is committed to those areas. So that was certainly a bit of a surprise to us. But the fundamentals and really what we do in terms of servicing our accounts, reaching out to prospects, networking, it's all the same. And like I said, having been in the industry for so long, we're able to sort of lean on our personal brand, so that the Water and Wall professional brand, as that sort of builds up and gains its own reputation, it sort of balances out.
Interesting stuff. Again, this is Andrew Healy. He is the co-founder and partner at Water & Wall, and I'm Frank Washkuch, news editor at PRWeek. Thanks again.